All right. And
yeah. Second team.
Okay. All right. Got you. Make host.
No, co-host.
Remote co-host permission.
Yes.
Okay. Good. All right. So I've been trading since 2016, 2017, and IM is what got me trading. Actually, before IM, I would say probably about 10 years before IM, I wanted to start trading, but there was just such a high cost to enter, to get a program. I mean, they were upwards of $5,000-$6,000. And even some up to $20,000 to learn how to trade. And I just didn't have it at that time to, be able to invest in something like that. So once IM came around, it was just a no-brainer, to be able to get in and learn the markets and things like that. And really beyond that, connect with a whole bunch of people that also, knew a lot more than I did. And they were able to impart, wisdom along with, the education that we're already receiving through the program. So Fibs, I actually learned from none other than Curtis Cobain Branch, and also Benny Allen, who actually helped Curtis out when he first started trading too. So we learned from some really, really good people. And so I'm excited tonight to help keep that kind of education going and even coaching. So with that being said, I'm going to get my screen up here. Let's see.
Now we want you to look at the US 30.
You want to look at the US 30?
Yeah, baby.
US 30. You love some US 30. I know you do. That's good. You will look at that. We will look at that. So my brother want to look at US 30. Money Mike is the man, so I can never deny him. Let me get my charts. Sam, are you able to admit? Okay.
What are you coming for?
What?
Who did it? She said when they be.
Okay. Let me clear this out. Just a little bit about, the Fibonacci's. Fibonacci's are actually something that is very, it's a very old thing actually, and we find it in a lot of markets. One of them being, aside from this market, you have find it in artistry. They say it's almost like God's pattern because you can find it in some of the, I think even they said like leaves and things like that have the Fibonacci. So Fibonacci numbers are, have been around. And so they just found a way to apply them to the charts to be able to take advantage of them in the markets. So let me clear all this off here. We can start fresh. Here we go. And Mike, you said US 30.
Yep, US 30.
Let me know if I'm on the right one here.
Okay, if you're a trading view.
Yeah. Is it
Okay, yeah, so Yeah, if you go to US 30 and then well any of the pair like NASDAQ or any of those. Can't see it real good on my phone, but it looked like it peaked and then it dropped. It's been dropping ever since the market closed. But move your screen over to the left. That might be it. I can't see what it say up there. Let me see.
Well, and this is
No,
Apple.
you're on Apple right now.
Yeah, that's Apple right there. Is it an indices? Indexes?
Yeah. Indices or index, depending on what platform you're on.
Okay, US 30. You said what is
US 30. It could be NASDAQ, or you can go to S&P 500 or NAS 100. They all move the same.
Okay. Let me see.
But
Okay.
in trading view, I think you can just go right there.
Okay, and I'll take questions at the end, okay? So that we can make sure that everyone is clear on what we're doing here. So I don't know why I can't get to US 30.
Oh, yeah. I thought it was right there.
Register now. The information and link.
You have to click on Oneida at the bottom. Down at the bottom where it says Oneida,
Where is it? I'm
all
sorry.
the way down, Oneida.
Oh, Owanda?
Owanda, yes.
Okay. Let me see. All right. Thank you. I'm not used to trading US 30, so that's not. Okay.
Okay, the key though is if you can set the fib on a downtrending market. That's the biggest thing I want to see. If you can, using the fib extensions, but I want to see how you do.
Yep. Okay, so, well, Mike just
Okay.
said something real important, because when you first come to your chart, the first thing that you want to know is, am I in a downtrend or am I in an uptrend, or is the market consolidating right now? So that's one of the most important things that you have to be able to know when you're coming into the market, because that's going to be key. And so for me, if I was just looking at this chart, Mike, one of the first things that I would do, what time frame you trading on?
1 hour.
1 hour. All right, 1 hour. Okay, 1 hour. So can anybody tell me what kind of market are we in? Are we in an uptrend, downtrend? What kind of trend are we in?
Down.
Downtrend.
In a downtrend? Because?
Yes.
And why would you say we're in a downtrend?
Yeah, can you zoom out a little bit? Let me see.
Was that?
Can you zoom it out a little bit? I just need to see like
Oh, yeah.
the actual,
Zoom
but
it
it
out.
looked like it's just ranging. But
Overall, it's ranging. This is all sideways movement, honestly. If we were really looking at it like that, this is all really a ranging market. But over here, if we were to zoom in a little bit closer, we could be able to take advantage of some downward movement, because the market is making lower highs and lower lows, okay? This would be considered the same low. So it broke the low right here, and a lower low or high. And those are determined by the pivot points. But one good way to just kind of come to the chart and see where you're at is I usually use a 50 and a 200. And I'll put it on, and you see how squiggly all this is really? But that kind of lets you know that the market is ranging overall. All of this kind of messy, right? But we're currently under both the 200 and the 50. So we are definitely currently in a downtrend. I'm gonna take it off because I don't want too much clouding my chart in my mind. Okay, so if we're in a downtrend, and I wanted to use my Fibonacci extension to take advantage of the trade, the thing that I would do is I would have to look and I would have to see, okay, what previous structure has or what recent structure has been broken. One second.
Hey, Tam, can you mute those other mics?
I know.
Yeah, Tamara's.
Headphones out. Sorry, guys. It's gonna make me co-host again, and we're gonna get this right, okay? I apologize. Just one moment. Gotta find myself in here. All right. And two, what we're gonna do, there I am. See that one? What we're gonna do is have.
Did not do that.
Thank you, guys. Sorry about that. What we're gonna do is have Loren go right through his step-by-step explanation of everything, and we'll take comments and interjections and things at the end. So that way he can just stay right with that flow, okay? That's how we'll do it.
Right, thanks. Okay. So like I was saying, the first thing that I would do if I was coming to the charts, I would have to determine what recent level of market structure has recently been broken. Since we're in a downtrend, I would say I would be paying attention to this level here. This level had been broken and we had a pullback right here. So really we're in what we call a C to D extension at this point, okay? So the market moves in waves, right? And I know if you first join IM, one of the things that they said is you're gonna have to learn your ABCs, right? And I'll show you what I mean by that. Let me get out of here real quick. So ABCs, one of the things that we like to look at is when the market does what we call an impulsive move, which is this move right here, and it breaks through a structure. That's my point A. The market hits the B, or which will be the low. And then I'm looking for it to pull back to a C. And when it pulls back to a C level, which actually happened to be this level right here, then it goes into what we call the D extension somewhere down here. And we'll have to figure that out. And I'll show you that right now, where I expect for it to turn around at using the Fibonacci, okay? So I usually keep my drawing tools down here. Get down here for some reason. Okay. And I know some people, okay, so here's the thing. So there's over in here in Trading View, right here, there is a list of tools that you can use. One is Fibonacci fib retracement, and the other is the trend-based fib extension. Okay, so I'll show you the difference between the two. Now, I only use the trend-based fib extension tool because I've learned how to use that only, and not have to use both the fib retracement and the extension. So the fib retracement is for your entries, and the fib extension is for your exits, where you're going to exit your trade. Because with your trading plan or whatever you have to use, you should have a trading plan. Your trading plan should say, I enter the market when I see this, and I exit the market when this happens. And so that's going to keep you consistent in your trading. Okay, so let me show you the fib. Okay. So when you're using the fib, you go from swing high to swing low. And if you know what constitutes a swing, you should have where the market turned around. Okay, so any point where the market turned around is really, it's called a fib. I mean, sorry, not a fib. It's called a fractal or a pivot point in the market. So a swing high would be right here. The market came up and it pivoted and it started going back down. The market came down here, did a pivot, and it started going back up. So in a downtrend, we want to know how far the market is going to go up before it goes back down, right? And so when this happens, when you have this pivot from this move to this move, is called your A to B, okay? And actually, I'll kind of show you better on that one so we could see what actually happened. So the market created your A to B move and then your B to C retracement, okay? And using my fib tool, I will go from my swing high down to my swing low, back up to my swing high. And if I were looking for a trade, from what I've been taught, my golden zone, hold on. I keep getting this little thing in the way. Okay, my golden zone would be actually between the 50% and in the 61.8. Now, I'll explain something because this kind of looks, this is actually, the way I draw it is technically backwards because I eliminate having to draw both my fib and my fib extension. Okay, so this one already has my fib extension involved in it. So I'll show you that in a second. Market came down from 0. This is my 0 point. This is my 100% point. So from this move to this move is 100%. I want the market to pull back at least 61.8% of that initial move from that A to B, somewhere around 50 to 61% of that. Now, it did that right here. So honestly, if you subtract it from 138.2 from 100, it'll be 61.8. So it'll be the same. So the market actually did that, pull back to that 61.8. And then if it does that, when I usually look for an exit point, I know that typically if the market pulls back to either the 51, to the 50 or 618, I know that the market is going to go down to the 1618. Okay. And guess what? The market actually did that. Sorry, I didn't mean to move that. And right here, I will. Okay, got it. That's my 1618 fib extension. So let's see, and the market hit it, right? So if I let this all happen, and this is what trading is, this is where patience comes in and pays you, okay? Because if you can let the market do this move here every time, it's most likely gonna pay you every time. And that's the magic of the fib, okay? So look, if I caught that move right here, and this US 30, right? And I took it all and I let it run all the way down there. All right, Mike, how we reading US 30?
Whatever that say, add a 0 on the end. So I can't see it. But how many pips I calculate, add a 0 on the end. That's how many pips.
So if I'd have caught this move right here, I would have had $162,840.
That must be over a very long period of time. How long is that?
That's over 7 days.
There you go. That's the sweet thing about the indices of indexes. Every numeric increase is actually 10, not 1.
So
that's the beauty of the indices.
So check this out. I might have to start trading US 30 now.
I've been trying to tell you.
Mike been trying to tell me. I know you've been trying to tell me. So look, guys, but look at that. If you can wait, even if you didn't trade, which you probably wouldn't be trading during this time, you'd be waiting for these moves to happen, right? If you could wait for something like that, and then once it gets up into your level, then you start looking for what you call your entry signal, which would have been for me right here. At that level, I would have waited to be able to see that happen, which is called a bearish engulfing pattern at the level that I'm looking at, breaks it, and then gives me what I want to see, even pull back a little bit. I would have got my entry in, and it's like almost picture perfect right there. Okay. Actually, I will take a question just in case somebody is confused on anything, and I don't want to go too far. So does anybody have any questions just yet?
Yes, I have a question.
Okay. And who's
All
this?
right, so yeah, so and then the engulfing candle where you at with that you will do your entry. Will you wait till you close on that candle and then go to the next candle to move in, or will it be open when you enter?
Well, let me just make sure. Okay, this area right here, right? I have to let this play out. I have to see this happen first.
Okay.
Okay, that has to happen at that level. That lets me know that the sellers came in the market, okay? And most likely the market is gonna pull back to what we call, so this right here is called the proximal line, and this is called the distal, so the furthest from and the closest to. Proximal is closest to, this is furthest from. It's gonna come back somewhere near that line. And this is just a small pullback, is what that is, pullback. And now it's taking off, okay?
Thank you.
Yep. And so that's when, and you could have kind of looked at this here too. See, that's another one, right? And you could have drawn that across, and that's kind of like told you about where it was gonna happen at, okay? So you see those kinds of things, then this had a little bit of upward movement, but this one was real strong right here. That was real strong, okay? And the thing about it is your stop, US 30 moves a little different. So, I mean, you want your stops to be kind of tight, I guess, with US 30, but normally your stops would be above this level right here. But the thing is, you should be trading, with, a lot size or whatever that you can, afford to, to trade with and not over leveraging, because that's going to be key in your success, to, to being successful in trading. So, but that's the move you want to look for at the level that you expect price to move or turn around in, okay?
Question.
Yep.
When you first applied the tools, that was so I've always tried to use just a regular fib. So that was the one up under that. What was that called again? The fib extension, the tool that you used?
Yep.
The fib? Okay.
I'll show you, because I did say I was going to do that. This is this regular fib retracement, right?
It was a trend base. That's what okay.
Yep.
Trend base.
And so when you draw a fib, draw it from, from the high to low in the down market. And so this is where your 61.8 is, right? So it said it has it right on this one, okay? But the only thing is, it doesn't give you your extension, so you would have to go in and you would have to get your extension tool. Then from there, you draw your fib extension. And then, so you draw on the two lines, you know, you draw on the two things, and then it'll have the same information on there. But now what I've learned to do is just to grab the extension tool, and I just use that. And I'll go from swing high, swing low. And I know that the values, the 50% is going to be the same, okay? These two numbers are flipped. The 61.8 and the 38.2, they're flipped. So, but on the other side, like I said, if you, and I think I had the calculator. Oh yeah, I had the calculator up because I knew this was going to be so 100 minus 38.2 is 61.8. So if you did that, you would know that this is.
And if it's being recorded, they're gonna play it back.
She might stick it up in that chat
All right.
or put it on YouTube or something.
What was that? Oh, y'all, you guys are unmuted.
Shit, we know a lot. I be seeing other people use that ABCD pattern thing.
All right. I think Tamara muted. Okay, so this, but check this out. This happens all over the market, okay? Over and over and over again. Like you'll see this pattern happening. But what you wanna do is you wanna make sure, if you're gonna use like the ABC pattern, you wanna make sure it's first, it's broken some sort of high or low, right? So in the downtrend, we're looking for lows to be broken and for new lower highs to be formed, okay? So you can just keep doing that. So where we're at currently, and here's something you wanna know too. Okay, hold on, let me see. We're currently here. Now, one of the things you wanna, like I don't trade the fib, I don't trade the 32, the 38.2. I only trade when it gets between the 50 and the 38, that golden zone. Other than that, you'll be putting in a whole bunch of trades, and you know sometimes those will fail you, right? So you want to take quality trades. So for example, this right here, this didn't come back up to the to my golden zone, right? Didn't make it up there. So guess what? I'm gonna have to let that trade go. And I'm gonna have to be okay with letting that trade go because it didn't meet my criteria, okay, for trading. That's why you have a trading plan. I'll preach that till the cows come home. If you don't have a trading plan, you have nothing to stick to, and you'll find yourself placing a whole bunch of unnecessary trades, and you might get discouraged because you'll wonder why am I losing so much? Okay, or why is, you know, because you're trying to take everything, right? You can't take everything. You want to take the highest quality trades. So that's why the educators put these, you know, these trading plans together for us so that we can take those trades and that they're high quality trades. Okay, Rebecca, I see your hand.
Hi, okay, so you're saying you're gonna wait when the market is downtrending, you're gonna wait till it passes. And I'm a little bit confused because I'm using the regular fib numbers, but you're gonna wait until it goes past your 618 zone. But then you want it to retrace before you get back in. Is that, am I understanding that correctly?
Okay, so yep. So like if say none of this happened yet.
Right, right.
Right here. If the market came up and it didn't hit my zone, then I personally am not going to trade or try to catch a trade because it didn't meet what my rules were, right?
Okay.
My rules state that I have to have the market come up to this area right here.
Mm-hmm.
Then it has to show me what I showed you guys back over here.
With the engulfing candle.
Engulfing candle. And then I'll take a trade. Okay. So it has to be an ABC move. Then it has to show me my signal for me to enter the market. And once I see my signal, then I'll take the trade. And then once I take that trade, I expect for it to hit this level down here. Okay, if it has retraced to this level right here, I expect for it to go to the 1618. Now, what I have to do at that point is I have to close my chart, because if I keep looking at that and I keep seeing price go all the way up here, then it look like it's, you know, doing, and then I start thinking, oh, maybe the trade didn't work, or maybe maybe I got it wrong, or something like that. I have to close my chart at that point, because all of that, all of this right here, you see stuff like this and you start, fearing like maybe I made the wrong decision. And then guess what? You start closing out trades and you start losing money. You have to know and be confident that the market is going to do what it's going to do. And you have to let it do what it's going to do. A lot of times we end up babysitting trades a lot, and we close out only to see that, oh man, it actually did, what I said, what I thought it was going to do. You know what I'm saying?
Yeah.
So that's just market psychology that, if you could, the sooner you learn it, the better.
Okay.
And, I'm telling you, it got me in the beginning, because I started, I was like that, just like, man, I'm gonna close this trade out because I don't think it's gonna work. And then all of a sudden, it did, maybe hours later, maybe even a day later for me, because I usually, I trade 1 hour, but I tend to stay on the 4 hour and the daily now. I don't usually trade anything too much lower than that. I try not to.
Okay. Thank you.
Yep, you're welcome. Anybody else?
Let me ask you something, Lawrence. Do you, because I know you're busy, and you like the long trades, okay?
Yep.
Do you use the time fib to kind of forecast how long it's going to hit your target? Because 618 down to 1618 is a long run.
Mm-hmm.
And I just heard you say, well, I just closed my chart down. That means that up your
Hold on, you breaking up.
take profit or your stop moving up this. Okay. Can you hear me any better?
I can hear you now.
Can you hear me any better?
Yep.
Okay. I heard you say you close your charts down, so you don't even move up your stop loss to secure your gain. Because in your example, the market just falling. But sometimes it's a turnaround to the upside. So you just let it run, you can move up your stop loss and nothing. What?
So with like trading like the higher time frames, for example, so like if I was to move up to the daily and I was to look at, the daily, so, each candle, right, is a day. So if I'm looking at this, then I know that, I'm really in the uptrend, right? Because really the market is kind of really making higher highs, higher lows. So that's really what's going on in this market. And then let me see. Okay, so now we're kind of flirting with, going into a downtrend now, because we've had a close of candles below that, right? So if I was to look at this, I would say the market found structure kind of right around in this area here. It's kind of not, so clear, but it's finding structure right here. But say the market was to break this structure, comes down, right? Then it pulls back. I'll be looking for it to pull back to find resistance here. I would take, I'm gonna use the regular fib on this so I won't confuse you guys too much. So then I would take that and I would say swing high to swing low. Okay. And so say this is my golden zone, right? So the market comes up in here, sets me up, gives me time, right, to do what I need to do. So let me get my extension here. My extension, I'm gonna take swing high to swing low, back to swing high. And this will be my exit. So in between all of this time right here, the market is gonna do whatever it's gonna do. It's gonna, it's gonna come down here, it's gonna bounce off. Guess what? It's gonna bounce off of each one of these levels because each one of these levels are levels. They're support and resistance levels. So it could come down here, bounce, come back up here, and then come back down, break through that, come here, go back up, and keep going and keep doing that all the while, like it's doing over here. It's doing that same, all that stuff is going on over here. Now, what we like the market, and we want the market to do mostly is just go straight down, go straight up, and go straight to where we want it to go. Well, that's not how price works. So if I'm able to close my chart, what I would do is when the market makes this move here and starts really actually heading down to the extension, see the D extension? My entry is here, right? Now, here is where my stop, literally here is where my stop loss could be if I was trading a reasonable lot size, okay? If I'm being risky though, then my stop loss is gonna be above this level right here. Because the rule is, if it doesn't take out your A point, then you're still in it. You're not out of it yet. So if it doesn't take out this, then you're really still in this whole move. And then once this is fulfilled right here, once this is fulfilled, the game resets. Now your C is your new A, okay? Your C is your new A, your D is now your new B, and you're looking for the game to happen all over again. So you're looking for another retracement back up to another 61, another one, 618 move, okay? So once your C to D extension has been fulfilled, the game resets. Now your previous C point is now your A point. And that's how you keep taking advantage of the fibs. So then you keep drawing them over and over again. Okay. Does that make sense? Did I confuse anybody? And that's why I shut my chart down, because I just got to let all of that happen.
Yeah, it makes sense.
Do you trade on the 1 hour? Or
Yeah.
where are you normally marking it up at? Sorry.
So the way that if I'm trading, like the 4 hour is really where I kind of like to live now. If I'm trading the 4 hour, but regardless of whatever chart you're trading, I'll say this, whatever chart you're trading, here's a rule of thumb. You always want to know what the chart higher than that is. because that's going to determine your bias as to where the momentum is. So I'm trading the 4 hour. I'm going to at least be looking at the daily to say, okay, on the daily, we're in an uptrend. We're making higher highs, higher lows. So the 4 hour, I'm going to be looking at, you know, really taking buys, because I think that if I take a buy, then I'm expecting that resistance levels are gonna break. They're not gonna hold because we're in an uptrend on the daily. So those are safer bets to take, as opposed to me trying to trade opposite of what my higher time frame is telling me. Okay, but so when I trade on that, then guess what? I'll make my entries on the 1 hour or even the 15 minute. I'll make my entries on the 15 minutes. So I use lower time frames for entry points. So I can catch some of those moves much faster if I drop down to a lower time frame to make my entries on. So you use, so whatever chart you're trading. So if you're trading the 15 minute, for example, you definitely want to be looking at what the 1 hour is doing. Okay, I'll say the 1 hour, skip the 30 minute, 1 hour, and then make your entries on the 5 minute. Does that make sense?
Yes.
Okay, and so let's look at some ones. Mike, I'm gonna move away from US 30 for a second.
Yeah, that's good. One other quick question, because I know you use 2 of those fibs. On the traditional fib, if you put the 1.382 to 50% and the 618, will it line up with your other fib extension? You know, those levels? Instead of using 2 tools, can you just do it in one, or does it work out the same?
Yep. So that's why I ended up, you know, just using the 1, because, for example, okay, so here we had a break of structure right here, right? So this is my high point right here. I'll show you. Sorry, let me use the regular fib. So I'm gonna go from this high right here down to this low. And the market pulled back. It pulled back 50%. Now, some people trade 50%. Okay, you just have to kind of, I would say if you're gonna trade, either trade, you know, I say trade in between. If it comes in between those 2 lines, then you know you're good. So high, swing high to swing low. Back to it came back. So this is your A, B, C. But guess what? We're in the C to D extension. Okay, now let me grab the extension tool. And I'll show you how it lines up. See that 32.8? I mean 38.2 and the 61.8, they're in the same spot. That's why I just learned to look at it backwards, because it already has the extension on it. I don't want to keep, you know, I don't have to grab 2 tools. So that's the reason why I just use the fib extension tool, because I know that this level, the 50 is going to be the same, but it's these 2 numbers right here that get flipped. Okay. So that's the reason why I do that. Okay, let me see. But as far as this is just it's gonna come down, come back up, and that's where it broke structure and tested it a couple times and then took off. So if I'm looking, I should have marked that out.
Lauren, while you're doing that really quick, you're using that bottom 618 as your exit. When you use the fib extension, you're using that bottom 618 as where you exit where you exit the trade.
Yep, the 1618. This one.
Mm-hmm.
Yep. So that's the extensions are for exit points.
Okay.
So if you were like, for example, if you were looking at the harmonic scanner, right, which is a tool that we have in the academy, then those are fib extensions. So right here, this would be a TP1, a take profit 1, a take profit 2, and a take profit 3. Okay, that's what, if you guys ever have checked out the harmonic scanner, that's what those numbers would be on there. And
Okay.
and once it gets down to this level, you're gonna start seeing it do like some sort of reversal, and on a higher time frame, it's probably a bigger move that would be happening over the, on a higher time frame. But if you could see, I'll show you. If I draw a line right here, look at this. The market reacted on that line every time. So over here, in an uptrend, everybody's still there, right? I don't know what just happened. In an uptrend, it would be different. In an uptrend, I would go from swing low, for example, to swing high, back down to swing low, and I spread it out. Now the market came back down, and it came down kind of far. This would have worried me, because once it starts going past that 61.8, then it starts showing signs that the market is going to start weakening at some point. And over here, it started doing that. But this was kind of weak right here. But if the market comes down to like well, this would be the 786, then I know it's only going to go up to like the 127.2. So those are just things that you start to get familiar with, and hopefully you're writing that down. Let me draw it with the regular fib. All right. So this is, let's see something real quick. Sorry, guys. Draw it this way. All right. Now I'll show you. So the market came up and it actually went higher, right? Which was good. Each one of these levels, though, you're going to start seeing in the future, the market is going to start reacting at those very same levels. Okay. So that's what the fib really is. It's a support and resistance tool. So you can be able to kind of look at future price too, if you kind of like put some lines on there. And then in the future, the market is going to react at those levels. You see how that is? Hit it, came back up, hit that line, and it keeps just doing that over and over. All right.
I have a question.
You have a question?
Yes.
All right.
I wanted to ask, when you were drawing the, I have several questions. When you're drawing the fib on here, why didn't you use the lower low instead of, you went to the first one and you drew it? So was there a reason why you didn't go to the lower low?
Let me see. You're talking about over here?
No, go back to the first one. Yeah, right there. You went from the high to the first low instead of the lower low.
This high to this low?
Yes, instead of that high to the lower low.
Instead of this high?
No, the high
this high,
to the lower low,
to this low,
third low.
this low,
1, 2, and one more.
to this one.
Yes.
Okay, sorry. Okay, all right, I got you. All right, sorry about that. I was looking at those two. So let's look at that low. So in order really for, so this to me is not totally, it's not totally established to me. Okay. It's still ranging, it's still in indecision as to whether it's going to come back up or whether it's going to drop down. Okay. And the only reason I drew that, because really honestly, I can't really draw it yet because this one hasn't been really fulfilled yet. Okay. So if I was to, you know, from what I had before, sorry. From what I had before was right here. Market came up. Now I said this is in a C to D extension, right? So this is still on the way down. And so I'm not, right at this point, I'm not trusting that this is an official low yet because it really hasn't shown me really good signs of you know, sticking at that point. I'm expecting this market based on what I know about fibs and where they go, this is gonna come down here, okay? So this low is it's a little shaky. I would be, you know, looking better at this point because really this came back, but broke this support right here, pulled back to it, and it's still going down. Okay, all of this is a support level right here that's been broken, and it came down, then it pulled back, and then it came down some more. So I'm expecting it to just go down, and once, like I said, once that C to D extension is fulfilled, then I'll be able to draw my line from here down to wherever the D extension hit. Okay.
Okay. Another question. The when you're using the fib, I'm attempting to use it right now. I'm learning it, and I noticed that it's not lined up or set up the correct way, and so my my retracements and my lines is kind of like not right. So I don't know if you've gone through that already, but can you walk through what the steps each one should be?
Yep. So so when you have your indicators and you want to let me see if I can get, I'll just put something here. Oops. Okay. So settings, go to settings, and in settings, you have all of your lines. So yours, I'm not sure, I mean, should have you share, I should have you share your screen, Keisha. Can I give her, you mind sharing your screen if I give you the right to share?
Yeah, I don't mind.
Okay, I don't mean to put you on the spot, but oh, she could automatically? Okay, all right. So I don't have to give her permission. Okay, Keisha, go ahead then. Tamara said you could share. You know how to do it. Let me stop sharing. All right. Okay. All right.
Do you want me to pull mine up?
Yeah.
Okay, so let me do that right now. I'm so sorry.
Yep, no problem.
How do I, oh, look, I don't even know how to get out of here. Okay, so when I'm in here and I'm marking up the charts, let's see. And I normally kind of go to Dr. Kathleen Kirkland, and I'll just pull it up. I'm trying to clean it up so it won't have all of that. Okay, so when I'm looking at this, so for me to look at this, 1, 2, 3, I'm looking at from my low to my high, and then it's doing like a retracement, right?
Yep.
And so I would go to my fibs. Normally I would use this one, fib retracement. And when I mark it up and I take it from the lowest up until my high point, and
Yep.
that's right there.
Yep.
Okay.
Yep.
And then I would extend it out.
Yep.
So from what I'm seeing that you're showing me, because this has the extension on there as well, it tells me that this is the, well, this part right here is the 50 percentile, and this is the 618.
Yep.
So the way it's lined up, that's where I was having trouble with lining it up. And this is what I have. And so I just wanted to see if what I have is accurate in how it should be seen on screen.
Yep. So far, what you have looks good. So like, okay, if you exit out of that box real quick. And so right there where you're between the 61.8 and the 50%.
Mm-hmm.
So in this case, like the market is in the uptrend, right? It's making higher highs, higher lows, right?
Yes.
So if I were to want to take a trade within the trend, right, in the direction of the trend, wait till the market comes down to that area, the 50, between the 50 and the 61.8. Okay, so right in that zone right there, I call it, that's the zone.
Is that where they normally draw a box?
Yep.
I don't know where the box is at,
Yep.
but this is the area where they normally would draw the box at, and they, can you explain that part?
Exactly. So that's just the zone, because, you know, it's not an exact, right? So you want to have like, you know, a lot of room for it to kind of do its thing. So, so that's why we say it's a zone. But if it pulls back into that zone area and then shows you some bullish momentum, like a bullish engulfing candle, then that's when you know you can take a trade in a continuation, a trend continuation, which will be your, so right now you're at the start, at the top, that's starting the C, your B to C, right? That'd be your B to C.
Right here?
Yep, that, and down into the zone would be your B to C move. And so what you want to trade is you want to trade C's. You want to trade the C's. So in up, you want to trade to your C point. Okay, so right now this is your B to C, this is your B move happening going into your C move, which we're expecting the C to start turning around that zone. And when it starts turning, that's when you want to take advantage of it from the C to the D. Okay.
Now, is this part right here? Is that what you're saying? And you want it to come into this area over here before it would turn around and go up?
Yep.
Okay.
Yep. Because if you take a trade now, then you're counter trend trading. If you're selling. Now we don't know if the market is going to retrace that far. That's the thing. It can retrace. It could turn around at the 38.2 and start going back up, right? And then you'll be in a sell, and you're selling against the trend. Okay. So if you want to stay consistent with what the trend is, then the best thing, the more probable thing would be to wait till it gets down into that zone. Okay, we got a couple questions real quick. Let me make sure. Who had their hand? I don't know who had their hand raised first, but go ahead and ask a question.
Hi, it's Cookie. I just wanted to ask if you mentioned it like kind of quickly, but I thought I caught it, but I just wanted to clarify that if you're looking at that setup right there,
Yep.
and it was coming down from the B to C,
Yep.
past the 61.8 and touched maybe the 78.6.
Mm-hmm.
When it gets there, you mentioned something of the effect that it's an indication of a weakening of the trend. Is that correct? Did I catch that or no?
Yep. Yeah, it could mean that the trend is starting to get a little weak because you had such a deep pullback. So the trend could be starting to, it could be switching in a different direction soon.
Okay.
So
soon.
Yep.
So would you take it at the 78 or would you wait until it got to the 61.8?
Well, I mean, you could take it. I mean, you could take it at the 71.8 because honestly, it still hasn't broken your A point. Remember, your A point is down there where she had. So you see where her A is, where she started the. Yep. So that's her A. That's the A point. So if it doesn't break that and close below that, now if it closed below that, then yeah, we're in a different ball game. Now we've broken structure. And we're possibly going down from that point. But if it doesn't break that point, and you get in at the 786, then I would say it's probably not going to go as high as the 1618. It's only going to go to 27.
Okay, that's another part that I was going to ask. Okay, thanks.
So this kind of just helps number two, it gives you a plan for your entry, right? How you want to enter the market. And then it gives you your exit plan. And those are two very, very important. How am I going to enter my trades and how am I going to exit? And the fib is a great tool for entries and exits and kind of let you know where the market is. Did somebody else have their hand raised too? Okay.
Okay, Loren, real quick before you move on.
Yep.
The weight trip, she took it off of there. Okay, that's okay. That's okay.
Okay. Well, but what was your question though? You still?
No,
I can put it back on. Oh my God, I'm so sorry.
No, that's all right. If she can do it real quick. I just want to do a recap of your technique. But she might have to pull it back up.
Okay. Now see how your extensions are actually at the bottom.
Yes.
Yep, your extensions are at the bottom. So like, for example, if you take this one off and then get another one and actually draw it from draw it backwards. I want to see if it,
When you say draw it backwards, what do you mean by
start
that?
from the high and come back down to the low.
Start from this way,
Come all the way
down this way?
Yep. Okay. So, and then kind of see if you can see the extensions at the top.
It doesn't,
You probably have to go to the price bar and like.
oh, right here. Oh, thank you. I'm still.
Yep.
Okay, here we go.
There's your extensions up there. Those are yours, and you don't have the 127 in there, so that would be something that you would have to add, you know, if that was something. But I would say if you're just trading the 161, I mean the 61.8 in the near the 50, those are, you only need that 1618 up there. But like if Cookie, for example, said that she was talking about the the 786, then you can definitely add that, and you could just do that in settings. You can just add a setting for it. So that's the reason why I draw them, and Curtis taught me that years ago. He was drawing them backwards so that he can have his extensions up, in the right places, and he wouldn't have to use two tools. Okay.
So if we're going from, we can reverse it, right? Or we're going from the high to the low.
Yep.
And I already have the extensions on there, so that means I need to add something.
No, only if there's one more that 1.272 right there in the middle.
Right here.
If you just click on that, yep, and then press OK. Yep. So now I just added in there. See, it's between the 100%.
Right here.
Now it's there. So if the market pulls back, in this case, so now your levels are flipped, but not really. Okay, only because past the 50% in this direction is really the 618 and the 78 6. Okay, but the only reason is so that you can have those extensions on there. You don't have to keep using two tools. Other than that, if you don't want to do it that way, then you can stick with the two tools by just going from swing high, swing low, and then do the same with the extensions, and then you'll just have, it just kind of looks crowded to me. So that's the reason why. And anything that crowds up my screen, I do not like. It just ends up being a bunch of confusion. So so that's the reason why we do that. Okay. And listen, this doesn't have to be the only time that we talk about fibs, okay? I mean, we can definitely, and this stuff is like, it takes time to learn and to practice. And so actually what I would do, I would like to do is, like, if you can, I'll drop my TAM. If you can drop my email in the chat, and then have some people, like, if you want me to kind of look at you drawing the fib.
Yeah.
And, maybe we can go over it, together, and see if you're drawing them right. I'm willing to do that as well.
Yeah, that's beautiful right there.
Boom, boom, boom. Loren Reeves finished up. There we go.
Nope, there you go. So just kind of like send me a picture of your fib when you get a chance. Just draw it out, and then we can kind of talk about it, set up some time to talk about if you're drawing it right and what you may be missing out, or maybe you missed on the call too. Then I'll be willing to do that too. So I just want to see everybody win and get that money, And I think that the fibs is just like a wonderful way to be able to, you know, kind of get your rules together. If you're trading in an unruly manner right now, for some reason, but I don't think so. I think we have a lot of great, you know, tools and educators. So you guys are in good hands. So any more questions?
So do you do this often where you teach? I'm pretty sure you're busy. But is it something that you do often, or is it just, you know, in the moment?
I haven't been doing it like often, but I do like it. You know, I really do like it, because one of the things that, you know, I always think is always a help is to, I mean, we see the educators, we see them winning, but a lot of times you don't have a lot of coaches in the program. And sometimes it's helpful to have like a coach. I know that's actually, you know, really what helped me, in addition to the education, when I was able to have somebody, you know, sit down with me and say, oh, wait, what, you know, you got to do it this way a little bit more, you know, you got to do something or change that up.
I think that's what I'm missing. Yeah, because we were saying the same thing. Like the platform is definitely great, but yeah, like just being together to walk through it and do it at the same time. Because I was trying to do it while you're doing it on the screen to make sure I understand what you're saying, and it makes it a lot easier to understand.
Yeah, definitely. And that, you know, that always helps. I see you, Willie. That's true. It just helps, you know, just to have, you know, somebody who's been doing it, you know, like a teacher or a tutor or whatever, say, hey, bless you.
Thank you.
To just show, you know, point out, you know, what may be going wrong, or, you know, just anything. You guys know I was doing the Go Live sessions too. So, you know, those things are important. And, you know, I'll open back up the Calendly if necessary, to be able to help with some of this stuff too.
Okay, thank you. I appreciate you doing this tonight.
Oh, you're welcome.
Thank you so much. This has been
so
so
much.
extremely helpful.
Yeah.
Thank you. Thank you, Tam. Thank you so much for taking the time, Lauren.
Thank you, Tam.
Well,
Yeah,
Thank
you're
you very
welcome.
much.
I'm admitting I have been an unruly trader, so we need to be ruly.
Hey, Lauren, what time you leave to go out to work in the morning? What time you leave?
Usually about 7-ish, somewhere around there, 7.
Okay, because you know, we do the group trading at 6 a.m. on Thursday.
Yeah.
I don't know if you have time just to you know, go over the fib placement on a Thursday, maybe about, you know, 15-20 minutes or so. We could start with the with the Forex first. We normally do HFX for the first 45 minutes and then Forex half hour after. But, you know, I don't want to put you on the spot, but that's just something to think about, because, I mean, you know, I don't have all the answers, but we do find that it's, you know, more enjoyable learning together. There's no question about it.
For sure. I think if you don't have people that you trade with, and that you can, you know, kick ideas back, you're heading for a disaster when you don't have people that you can trade with or that you can kick ideas off of. So that's a must. So, you know, what's going on in the morning time is great. And so you guys started like 6, right? On Thursday.
On Thursday, we start at 6.
Yeah.
And for those of you who are not familiar with what I'm talking about, we can put that in the chat as well, our schedule. I mean, you're more than welcome to join. Of course, I'm not an educator, but, you know, we just find that learning together is been most beneficial.
It is. It'll help you not give up.
Right.
That's the thing. It'll help you not give up, because, you know, if you trade alone, you know, you have no encouragement a lot of times, and, you know, then you'll end up falling off. But if you're trading with somebody, or you know, at least talking to somebody about the markets, then you're gonna, you know, you increase your chances for success.
That's an excellent
But
idea.
yes.
Please email your phone number to Lauren, so that way I can pull you into our team trading group if you're interested in that. Right, Mike? We talking for the Thursday morning session to do FIB and US 30, right?
Yeah, absolutely. If Lauren have about 20 minutes, I don't want to, you know, put you on the spot, jam you up.
No,
If you don't have time, you know, we understand, you know, no problem. I'd have to take you for a steak dinner or something. Like, entice you a little bit. Yeah.
You good.
What you just showed tonight, if we can get that down to a science with those parameters for taking the trade on the long term, that's it, baby. The game is over.
That
Slam
US 30?
dunk.
Oh my God.
I'm trying to tell you, man, I've been trying to tell you. And just, hey, man, don't forget my commission when you hit it.
All right. Oh, man. Yeah, guys, I enjoyed this. I know Tamara got another meeting she got to get on. So,
okay.
But yeah, you guys.
Oh, before you end, honey, anyone who has guests or whatnot, you know, I'm doing an 8 o'clock presentation on this same Zoom link for I Am Academy. So you can stay on, or you can invite friends, and, you know, I know it's last minute, but I'm going to be using the same link anyway to do the presentation. So that's what he's talking about. But go ahead, honey, if you want to end it, if you have nothing else.
No, thank you guys for getting on. I hope, you know, this helped, and you know, I look forward to seeing you guys win and talking to you. If you reach out to me, I would love to be able to help you out. So thanks.
We appreciate you. Thanks so much.
Thanks so much.
Thank you. Drop some
Thank you.
777. Thank you, Wendy. We appreciate you so much.
Thanks.
Thank you.
Thank you.
Y'all have a great weekend.
Have a good night. Thank you again.
Later, folks.
All right, good night, you guys.
See you,
Good night.
Rochelle. See y'all.
It's kind of the same thing, but you have a certain kind of
That was really helpful. Oh, Leah Brown. Okay, great. There's Leah. Let me get her. We got you, Leah.
Should I end, or are you?
Well, you can log off. I'm going to keep this. So make me host. Switch me to host. Right now, I'm just co-host. Let me see. Which one is me?
I just made you host.
Okay, great. Thank you. That was really good. Hey, Leah, can you put your phone number in the chat? And you're so welcome. Put your phone number in the chat right quick. I want to pull